Welcome to part 2 of the lecture. In part 2 we are going to look at bribery, self-interest and whistleblowing. We're going to identify and discuss the concept of bribery and the factors to consider when determining the morality of gift giving and receiving gifts in a business context. Identify how individual self-interests are weighed by an employee facing a tough moral code, and discuss whistleblowing, what it is, and the factors relevant to evaluating its morality. So let's get started. So bribes is any sort of remuneration for the performance of an act that is inconsistent with the work that a person is being employed to do in their contract and the nature of the work the person is required to do. So it can be money, it can be gifts, it can be entertainment, it can be preferential treatment. A kickback is a percentage payment of a person used to influence or control their actions in a way that's not consistent with their job role. So it's to influence the person or control some type of source of income. So a kickback is when you receive money for doing some action. So you might put in an order, and as part of the order you get a kickback of a certain amount of money back to you. It could be money, or it could be some other intangible or tangible benefit. In determining the morality of gift giving and what's receiving, you need to consider the following. What's the value of the gift? What's the purpose of the gift? What are the circumstances under which the gift was given? What is the sensitivity to influence the gift? What is the sensitivity that the gift has to influence the behaviour of the person receiving the gift? Is it an acceptable business practice or not? What's the company's policy and what's the law? And to assist you in these things, I've added a number of videos on the current bribery legislation that extend to the moral framework of bribery. Entertainment and gifts may or are only distinguishable in the way that they are consumed. The question you need to ask yourself on both of these things is, would an objective party reasonably suspect that the gift or entertainment might lead to the recipient gaining to sacrifice an interest of the firm for their own personal gain? The other area we want to talk about here is whistleblowing. Whistleblowing is an act of informing the public or some government agency about something that's illegal or immoral that's occurring in your organisation, that's causing unnecessary harm, that's violating human rights, it's illegal, that runs counter to the defined purpose of the institution, or is otherwise immoral. It's motivated by self-interest, it's motivated by professional responsibility, and it's motivated by the perception that you are acting in the organisation's best interest by reporting something that is occurring that is not in line with the organisation's goals or legal requirements. It's justified when it's done for an appropriate moral motive. It's justified after all internal channels have been exhausted. It's justified where there is compelling evidence that wrongful actions have been ordered. It's justified after careful analysis of the danger to yourself as the whistleblower. It's unfortunately, even though whistleblowers are protected in many ways, in many statutory ways, those statutory ways do not completely cover a person legally in some cases, but also there are many ways that whistleblowers can be punished, which makes it quite risky for some whistleblowers to blow the whistle. And finally, when there's a chance of success. Now, why is this section quite short? Because there is in fact some quite long discussion explained from the legal and operational perspectives as supporting videos provided here in the rest of the section on the lecture, which explain the key attributes and give you some case studies of whistleblowing. So, that's the end of the lecture coverage. Watch the videos that flow from here, including the case videos. prepare both your tutorial and your forum activity for next week, and I'll see you next week.